Hey there, welcome back to Bull and Bill. If this is not a welcome back, make it by clicking the subscribe button. Today, we're diving into what is arguably the biggest financial question of the moment. What does Trump's victory mean for US stocks? Yes, the results are in. Donald Trump has secured the presidency, and Wall Street is already reacting. But what does his second term mean for your portfolio? Will his pro-business agenda spark another market rally, or are there risks lurking beneath the surface? By the end of this video, you'll have a roadmap for navigating these uncertain but potentially rewarding waters. Here's a quick preview. While energy and defense stocks are celebrating Trump's win, tech and international markets are bracing for potential headwinds. And as always, the Federal Reserve's decisions will play a critical role. So grab your coffee, get comfortable, and let's break this all down. Let's start with what happened immediately after Trump's victory. The markets responded with mixed signals. The Dow Jones and S&P 500 saw a brief dip due to uncertainty but quickly rebounded, with sectors like energy and defense leading the charge. Meanwhile, the tech-heavy Nasdaq showed hesitation, reflecting concerns about renewed trade tensions and potential regulatory changes. This quick rebound mirrors what we saw in 2016 when Trump first took office. Back then, markets surged as investors priced in corporate tax cuts and deregulation. But remember, history doesn't always repeat itself exactly. Let's dig deeper into what Trump's policies might mean this time around. Trump's second term is expected to focus on three key pillars: tax cuts, 2.0, deregulation, and trade and tariffs. Tax cuts, 2.0. Trump has signaled plans to extend and deepen the Tax Cuts and Jobs Act. This means lower corporate taxes, which could boost profits for companies and drive stock prices higher. Industries with high tax burdens like manufacturing and retail stand to gain the most. Deregulation. From energy to financial services, Trump is doubling down on reducing regulatory hurdles. For instance, fossil fuel companies are already celebrating as the administration rolls back environmental restrictions, paving the way for increased production and lower costs. Trade and tariffs. While Trump's America First approach benefits domestic industries, it also reignites fears of trade wars. Tariffs on Chinese imports, for example, could disrupt supply chains for tech and consumer goods companies, creating volatility. But as with any policy, there are trade-offs. While tax cuts and deregulation may boost short-term growth, they could also exacerbate the federal deficit, leading to long-term economic challenges. Let's talk winners. Here are the sectors most likely to benefit from Trump's policies. Energy, oil, and gas companies like ExxonMobil and Chevron are clear beneficiaries of Trump's fossil fuel-friendly agenda. With fewer restrictions, we could see increased drilling, exports, and profitability. Defense. Trump's focus on national security and military spending means defense contractors like Lockheed Martin and Raytheon are in for another strong run. Financials, banks, and financial institutions could thrive under Trump's deregulation policies, which reduce compliance costs and increase lending opportunities. But it's not all sunshine and rainbows. Some sectors face significant challenges under Trump's second term: technology. While deregulation might provide relief, the risk of renewed trade wars with China poses a serious threat to tech companies reliant on global supply chains. Companies like Apple and Tesla could face higher production costs and limited market access. Renewable energy. Trump's preference for fossil fuels over green energy could slow growth in the renewable sector. Companies like Tesla and SunPower may face reduced government support and increased competition from traditional energy firms. Let's not forget the international implications. Trump's trade policies could strain relationships with key trading partners like China, the EU, and Mexico. Tariffs and trade barriers might create winners domestically, but global markets could experience significant disruptions. For example, during Trump's first term, tariffs on Chinese goods led to higher costs for U.S. manufacturers and retailers. If similar measures are implemented, we could see volatility across sectors like tech, autos, and agriculture. But here's a silver lining. Companies with a strong domestic focus, think regional banks and home builders, are less exposed to these risks and could emerge as winners in a more isolationist economy. Looking back at Trump's first term, the S&P 500 grew by over 50%, driven by corporate tax cuts and deregulation. However, that growth wasn't without challenges. Trade wars and geopolitical tensions introduced significant volatility, particularly in the tech and manufacturing sectors. So what can we learn from this? While pro-business policies can drive short-term market gains, the broader economic context, like inflation, interest rates, and global events, plays a crucial role in determining long-term performance. Now let's get practical. How should you adjust your portfolio to thrive in Trump's second term? Focus on domestic growth. Prioritize companies with a strong U.S. presence, as they're less affected by global trade tensions. Look at sectors like regional banking and real estate. Invest in beneficiary sectors. Energy, defense, and financials are poised for growth. Consider ETFs or stocks that give you exposure to these industries. And stay diversified. While certain sectors might perform well, risks like inflation and geopolitical tensions remain. Diversification is key to weathering potential volatility. Before we wrap up, let's tackle some common myths. Myth 1. The market always rallies under Republican leadership. Truth. While markets often favor pro-business policies, other factors like monetary policy and global events have a bigger impact. Myth 2. Trade wars hurt only international companies. Truth. Even domestic-focused companies can feel the ripple effects of disrupted supply chains and higher production costs. So, what does Trump's victory mean for U.S. stocks? It's a mixed bag. While his policies create opportunities for sectors like energy and defense, they also introduce risks like trade volatility and inflation. The key is staying informed, adaptable, and focused on your long-term goals. Thanks for tuning in to Bull and Bill. If you found this video helpful, hit that like button, drop your questions in the comments, and don't forget to subscribe for more insights into the markets and your investments. Until next time, happy investing.